Well, good morning, everyone. Welcome to Retirement Recap for Friday, July 24th. With me today is Jennifer Sahadi, our Director of Education, and I'm subbing in for both Rich Cawthorn and Rob Miles today. So we're going to go right to the market update for this week. And this week was a great week up until yesterday. Yesterday, a lot of negative news came out. And as a result, a lot of the positive gains we had in the market over the last couple of days have been reversed. So some of the bad news that came out yesterday was a lot of unexpected unemployment claims that came in that were worse than expected. Additionally, a lot of tech companies struggled, and as a result, the S&P 500 it was down pretty severely over the last day. However, we're still up for the week, which is positive, and hopefully we can end the week strong. One of the other positive benefits yesterday is we returned to a little bit of normal life because we had baseball come back to our lives. So opening day starts yesterday, and the Red Sox start up today. So positive days are hopefully ahead. We're going to segue now over to Jennifer and talk about plan design changes that plan sponsors can consider. There's a lot of things that during the summer, honestly, the retirement plan can sometimes go to the back burner when it comes to your responsibilities. But when it comes to fiduciaries, and today's a Fiduciary Friday, you really can't take a day off. So we're going to talk about some things that plan sponsors can consider for improving their 401k plans.
Thank you, Mark. We have some other positive changes ahead when it comes to retirement plans, and that's some really positive data when it comes to how to improve your plan through plan design. This is something that a lot of people have been asking us about, both on the education team and on your consultant team. How can I still support my participants while we're distant, while things are running partially? And plan design can really be a huge part of a healthy plan. What does that mean? Well, you can choose whether people enroll on their own or whether they auto-enroll, where people just automatically start, creating less paperwork for the participants and fewer obstacles to get them started on saving for retirement. Once people are automatically enrolled, you can also set them up for success with an auto escalate. Oftentimes, this looks like an auto enroll at 3% and then a 1% increase each year up to 10%. Studies have shown significant success with these measures that will help reduce barriers for participants and increase plan health for you. That's all from Education Today. Back to you, Mark.
That's great, Jennifer. That's great data. And obviously, auto enroll is something that a lot of plan sponsors have considered. We have a lot of conversations with our clients about it, and mostly because the results are really striking that more plans that adopt those features get to see really higher participation numbers. So something certainly that we'll continue to talk about with our clients. And we're going to lead into the weekend with an interesting statistic that came out yesterday. And with auto enroll and defaulting into retirement plans, the most popular investment these days are target date funds. And target date funds, as we've talked about before on these retirement recaps, are mutual funds that are automatically invested into a model that's appropriate for someone's age. And as a result, more participants are getting into equities at younger ages, which is a good sign because, as this chart shows you, the stock market is becoming America's favorite investment again, especially for long-term savings. So through a Bankrate survey, over 28% of U.S. adults say that the long-term saving instrument they prefer the most is U.S. stock market. So good news is that over the last few months, the market has been great. Obviously, we had a turbulent start to the year, but long-term, hopefully that investment will continue to prove profitable for everyone. Well, thank you, everybody, for joining us. We look forward to talking to you next week. Have a great weekend.